Good morning. This is the latest episode of the Bitcoin Morning Show, Bitcoin Morning Brief. It's March 30th, and I'm Leah Wald hosting today with Tone Vase and Giacomo Zucco, CEO of BHB. I hope that everyone caught Tone's video yesterday about his adventure setting up his miner, because we also have a mining story today. Tone, what happened?
Oh man, it was like I didn't spend like multiple days getting frustrated. I only spent like a couple of hours on it. I could not get my new miner up and running. I had very limited time. Literally out. I was like by the trailer, but it was like sub-zero degrees there. Trying to set up the new miner, and it was a fail. It wasn't a total fail, but it was a fail. I got my old miner running still, but there's a miner that's twice as efficient that's going to sit there on the floor for at least a month before I can get back there and set it up again. I mean, this is what happens, right? Because I'm flying to Vancouver today.
Giacomo, how are you doing?
I'm doing fine. Fortunately, I don't have any mining operation here. All the mining operation we have are in Bulgaria, far from me. So yeah, it's difficult. Maybe the first news will bring us to our commodification of mining. We'll see.
The Winter Wonderlands. All right, let's dive into these, I think, big stories today. So crypto exchange OKEx to roll back trades after futures plunge. So Hong Kong-based crypto trading platform OKEx will roll back futures transactions following what it called an irregular sell-off. What happened last night is that the price of Bitcoin futures on the exchange pushed prices down, way down. What's important to note here is that this was below the price of Bitcoin, actually a 20% difference in prices. And because of this activity, the exchange closed down. So I'm a believer in behavioral economics and finance. So to me, this shows an example of what can go wrong between the futures markets. But Tone, do you still feel that, one, that these future exchanges for a short period of time don't affect the real price of Bitcoin? And two, even though it may do it for a short period of time, can't this panic other people into making trades that they wouldn't normally do because of fear?
Very good questions, actually. The short answer is no, they don't. And it was very, very clear as we will get to the follow-up to this story. This is what happens in an immature market. I dealt with this. I remember all of this is not new. Back in 2013, when I was trading, going into 2014, all of these futures exchanges starting coming out. If anyone remembers the exchange 796, the first exchange to give you 20x leverage, and the first exchange to come up with an idea of socialized losses when they were forced to liquidate large positions on one side. This is basically the result. I mean, you don't know. There's three ways this could go. This could have happened, right? So we're going to start with, three ways. One of them is this was a malicious job by the exchange itself. Another way, this was, an external player finding a vulnerability on the exchange and exploiting it. Or the third way, which is the most likely of the three, in my opinion, though you can never rule out the first or the second, is the exchanges does not have the liquidity. And because it doesn't have the liquidity, it can have these wild natural spikes without any malicious actors internally or externally. This was dealt with back in the 2013 days. The difference back in the 2013 and 14, probably 2014 days, is that the price of Bitcoin was significantly lower. And the leverage was only 20x maximum, and most people were not using it at 20x maximum. So the results of your futures exchange going 20% different from your underlying exchange were seen as, buying opportunities or selling opportunities and taking advantage of those spreads instead of wiping out tens of millions of dollars from traders that are trading on these exchanges that probably shouldn't be trading at all. And that's the end result. This clearly did not affect the real price of Bitcoin, because the real price of Bitcoin didn't care that this one exchange was 20% off and or 20% higher, whichever way it went. And then it eventually came back to the mean of the underlying exchange. This is why they don't affect the real price, but they affect people mentally that are in those positions that were forced to liquidate.
Giacomo, if Tone's point number one, that this was a malicious attempt, is true, how would this work?
Well, actually, it depends on the specific case, but for how things are working now, let's assume that, for example, many people are opening some kind of long or short leverage position, and the exchange operator can see all this position, and it can also see eventual limits for margin calls, and they can actually move the price internally with fake volumes in order to trigger all these margin calls and get money with fake counterparties represented by the exchange. So this can happen also in legacy markets, not just in crypto markets. Maybe here it's just easier for the volatility of these assets. But I guess that in traditional markets, there is a lot of self-regulation and external regulation that is trying to limit at least this kind of front-running and margin call tricks. And while in crypto space, we don't know it was a malicious operation, as Don said, but it could be trivial for an exchange operator to actually see what are the bets of the traders and go to take everything with minor spreads from the average price, which would be considered anyway kind of normal. Sometimes this is like not normal. I think this is one of the interesting possible application of something which is still a little bit science fiction, but it's theoretically possible, which is a decentralized or anyway maybe centralized but externally auditable cryptography-based exchanges like atomic swaps or Lightning Network-based swaps, all these things that are yet not very, very ready for prime time because they are slow and inefficient and the preparation of the swap is still very difficult. But when this kind of stuff gets mainstream, everybody's thinking to the security implication because the exchange will not be able to run away with your money, or about the let's say permissionlessness implication because regulators will not be able to shut down exchanging without any kind of trust-based model. But there are also transparency implications because you cannot easily fake volumes or fake prices in exchanges that are not even influenced by a third. Even in those kind of exchanges, there can always be a strong hand that can come and manipulate the price. But I agree with Tony, you cannot change the price against the trend for an extended period of time. That's simply, it will have infinite cost. So eventually the trend rules.
Right.
I want to jump back in there real quick, unless you have a comment, Leah.
Go for it.
All right. So it does appear that, OKEx has announced that this was my scenario number 2, that someone had found an exploit and like an external actor has found an exploit and did the damage. Now, of course, you don't know that for sure, right? Because unless they're going to open their code and open their books and like show you every single message that took place between the employees of the exchange, you really don't know that for sure, because that is, if you go through all of the scenarios, that is what you want to say, right? That is your most optimal plan, that someone found an exploit, because you don't want it to be scenario 3, because then you show the entire world that your exchange is not liquid enough to trade on, because this was actually a normal process and then no one is going to trade there. You also obviously don't want it to be scenario 1. If that person that found the exploit happened to be an employee of the company that knew about the exploit, that then went ahead and exploited it, because that shows that you are an incompetent company hiring the wrong people that are willing to, exploit your own exchange. So the most, the least damaging answer is we've frozen all the withdrawals. No one was actually able to profit from this. We're going to return people their money back. There is a high probability that is actually what happened. But even if that did not happen, that is the least damaging. What's the word I'm looking for here? I guess damage control, or that's the most optimal damage control way to make sure your exchange continues to function going forward. Now, there is also external circumstances that can cause you to make sure that everybody gets their money back, and we're going to talk about that now.
Right, and just to make an end note, great explanation for both of you guys. One, why I think it's so valuable, Tone, that you cover price. Giacomo, your previous explanation right now on futures exchanges. Just a last note, right? Investing is really tough. It's important to understand the minutia of how they work, and also how it can go wrong and go against you, right? On futures exchanges, there is a cutoff on each commodity of how much it can move up or down during a trading period. A lot of people, as Tone just noticed, Tyler and I have seen real life examples of limit up or limit it down. An interesting example is orange juice futures that have been frozen before, and you'll have to wait 24 hours before you can trade it again. And thus everybody panics. Therefore, it will open up again, limit, and close for the day, right? So now if you're short futures, you're completely trapped in the market. And from a business perspective, this can completely bankrupt businesses who deal on these commodities, as well as just completely wreck you. So with that said, I will respectfully turn over the next story to Tone. Tone?
Oh, wait. Okay, you weren't gonna. I was gonna talk about it. Okay. So sorry. I thought you were gonna actually lead us into the story. If you wanted to describe it, but basically, the story hit the wire that one of the traders at OKEx, had literally showed up there and was threatening to commit suicide because he had lost $10 million worth of Bitcoin in that liquidation. If you want to click on that tweet, inside the tweet from Ken Wong, there you go. Now, I don't actually read Chinese, unlike some people on this program. So is the translation accurate?
It's pretty accurate. Yeah.
Okay, excellent. So someone apparently showed up at the exchange threatening to drink a bottle of poison because he felt that the exchange had liquidated his position, wrongly. Now, look, we've all heard stories from, not so much from the NASDAQ, from the .com bubble, but back from the 1989 bubble, probably even from the 1987 bubble in the stock market. Like, people are committing suicide when the market goes against them, right? But a lot of times you are less likely to, do something completely crazy when you have somebody else to blame. It's different, right? In this case, this person specifically had somebody else to blame for the loss because he should not have been liquidated, and that's why he had an office to show up at. A lot of times when people actually get, they lose everything. A lot of people, when people get wrecked, if they understand that the fault was their own, they don't go to these extreme measures. This tends to happen more often when there are other people to blame. Now, most of the time, these people will find somebody else to blame, even when the mistake is theirs. But in this case, there actually was somebody to blame. So incidents like this could be, could assist in the exchange. Say, no, you're going to get your money back. We're going to reverse all transactions. Because what happens is, if no one is holding these exchanges accountable because there is absolutely no regulatory structure and there is no office to show up at, it becomes a very dangerous situation when you have somebody to blame, but you can't actually blame them or do something about it. So keep in mind that, and this brings me to the point that a lot of people are like ridiculing this guy all over the web, which is completely ridiculous. And once again, I'm still getting backlash for my statement saying that that I'm wishing for people that have invested in scams like Ethereum and others to lose all of their money. See, that's the difference, right? Those people should not have been investing in scams. So I don't it's a very different situation. Now, granted, I don't want them to lose that money maliciously. I don't want an exchange, running away with their money. I don't want a guy showing up, because he had $1 billion in Ethereum, and then an exchange actually like stole his money, and now he's basically suicidal. That's not what I'm looking for at all. I mean, I think people should have regulatory protection on exchanges, and when I get to that in the next story. But the Ethereum protocol itself is not safe. And what happens when you lose $10 million, $100 million, because the Ethereum protocol was not investment grade. And to me, the Ethereum protocol is not investment grade. And here is the kicker. If something goes wrong with the Ethereum protocol, you have an office. You have the Ethereum Foundation. You have Vitalik Buterin. You're going to have this problem times 100 when Ethereum goes belly up. Bitcoin, it has done this significantly more responsibly and purposely did not put smart contracts into its underlying protocol. It has the real Bitcoin promoters always said Bitcoin is very, very speculative and it's just value transfer. And so there are big differences there, even though to some people they might seem very subtle. So I just wanted to go off on that tangent a little bit before we move on. So Giacomo, I don't know what comments you have to this.
No, I think this distinction is very important. I completely agree with you. For example, if we think about Bitcoin price itself, you can say that investing in Bitcoin, especially going all in Bitcoin, is dangerous because objectively it is. Bitcoin could fail as an experiment of new substitute for reserve global money. If it fails, it has no much utility, so it can go down and eventually it can go to zero if we prove that all this expensive structure of the blockchain doesn't work. So there is a non-zero chance that Bitcoin goes to zero. But on the other hand, you also have factually a chance to get wrecked if you don't invest in Bitcoin. So let's assume that Bitcoinization theory proves right. So in that case, you can have a guy with $10 million in US dollars or in Chinese national currency, and hyper Bitcoinization happens in, let's say, 6 months, in 2 years from now, just as an hypothesis. And then you have people losing everything because the money, the global wealth moves from traditional fiat assets to Bitcoin. So in each cases, you have a symmetry in which investing is dangerous and not investing is dangerous as well. While when you have a single operator that, so nobody, I mean, I don't imagine anybody committing suicide or trading to commit suicide because they didn't invest in Bitcoin and Bitcoin went to the moon, or because the Bitcoin experiment fails. While if your situation of loss depends on a single party, which is somehow identifiable, then it's, I don't want to say more rational to behave like this, but it is more understandable, more human, because you see a counterparty and this is like a cry for help. You try to convince this counterparty that they have to give you back what they took from you. So yes, when Ethereum will burst, then people will have specific phases to blame for decision, also with specific precedents. Like let's think about the DAO bailout. So when the friends of Vitalik Buterin lost money because of the DAO, people cried for help and they reversed the history. So they could do something. And that's very dangerous because that's the situation where a person that is financially ruined, they think that the counterparty can do something about it if they behave in extreme ways. So it's an incentive. It's a moral hazard incentive to behave even more in extreme way, because you think that if you threaten to kill yourself, somebody will save you and give you your money back. While with honest, decentralized, and not reversible, responsible investment grade technologies, still people can lose a lot of money, but this kind of situation is less likely.
Yeah, I agree with that. One quick final point. You see, when you're using the Bitcoin blockchain's technology, all you're really doing is utilizing an additional payment method to assist your business. With a very few businesses actually building on the technology itself, like Lightning, like things like that. They're few and far between. And those that are building, businesses on top of the Bitcoin blockchain, these people seriously know what they're doing, and they have a real VC investment. And otherwise, to utilize the Bitcoin blockchain, you're just integrating the payment method. That's it. You can always switch to another payment method or go to traditional payment methods if you could. The difference with Ethereum is people are actually building companies that depend on Ethereum as the underlying technology. And I think that's way premature and potentially very problematic.
Right. To end, as Tone explained, this has happened time and time again throughout history, right? A very good example is bank runs. And I agree with you, Tone, completely that unless we get rid of these scams, everyone can and will get hurt. And this could hurt Bitcoin. I mean, if you see Bitcoin potentially as a beautiful boat, then these scam coins can be seen as creating nasty barnacles. And we're not cutting these barnacles off quickly enough, and they're growing. And now people are getting hurt and people are losing confidence in cryptos generally, which hurts Bitcoin. But I can only hope that Bitcoin still stands with a polished boat when these scams, as Giacomo, you said, burst. So to move on to the next story, first of all, my sincere condolences to Yang Yong and his family. So very simply, exchanges need to get their act together as well. The next story is a good example of why these tragedies happen. Here we go. So 2 more Japanese crypto exchanges shut down. So 2 more crypto exchanges, Mr. Exchange and Tokyo Gateway in Japan, are reportedly set to cease operations amid growing scrutiny from regulators in the wake of a $500 million theft. This brings the total number of closed crypto exchanges to 5. So the FSA ordered Gateway and Mr. Exchange to make improvements to their data security and safeguards. But instead of making the requested upgrades, they withdrew their applications and are set to return the client's cash and digital currencies. Giacomo, will this regulatory oversight, and obviously this is compared to our previous story, but of crypto exchanges weed out the unsafe ones?
Yeah, that's the same debate of the other day in a way. I'm skeptical about it. I think that especially at the beginning, when you have regulators shutting down exchanges that do not comply with some kind of security standards or transparency standards, in the short term, that could be even good. But then the long term, you will have just a regulatory captive situation in which bad exchange will just pay the regulator to let them operate, and good exchange that maybe are not liked by the regulator because they are too much disrupting for some kind of rent-seeking position or some kind of incumbent privileges, then will be shut down without realistic concerns. So I think that having a single arbitrary human party that can monopolistically decide what is secure and what is not, often without very strong technical competence inside this. These are bureaucrats and politicians usually, and bureaucrats and politicians are in the long run they tend to be not efficient and not honest, but not because they are bad people, because of the incentives of monopolistic violent structures like nation states. So I'm skeptical in the long run that this is the way to secure the ecosystem. I think that education is way more effective in the long run, and education also needs some degree of suffering. Of course, it's better if the degree of suffering doesn't go to the extreme levels that we have seen in the history before. But for example, the idea that I mean, I've lost something like 3 Bitcoins on empty gox. I am in the infamous empty gox list. That was great for me. I learned. I mean, I already knew. I was going around telling people that keeping Bitcoin on a centralized exchange was dangerous. I was repeating that since 2012. But then when that happened, I felt it differently. And it was very, very educational for me. So I think that some degree of learning process with trial and error is healthy. And then when you interfere with that, giving a false illusion of security to people, you are not destroying the risk. The risk is still there. You are just destroying the, and you are just postponing a systemic risk over and over again until the black swan will eventually, until you have a situation like a Lehman Brothers situation or a Argentinian bond situation in which a regulatory approved or a subprime mortgage situation, something which is regulated, approved, deemed as secure, and so everybody invested because, well, the regulator says that it's okay, and then the systemic risk can be really apocalyptic at that point. So and still, it's mixed feeling. I like the fact that security standards and transparency standards for exchanges go up, but I don't think that regulatory pressure is the best way, especially in the long run, to accomplish that.
Tone, the FSA has also cited that there are many issues related to corporate governance and internal controls for these companies that are applying for their applications.
Yes. Again, right? Like, it's hard. We've gone through this topic again and again, and look, libertarians and anarchists don't want any regulation. And Giacomo, you're leaning that way as well, because you feel that there's no way regulators are going to be able to get it right, because you and I are sitting here in the crypto space and we see how 80 to 90% of the people surrounding us in the crypto space are totally clueless. And if they're clueless, can we imagine what the regulators are actually, thinking? And under the assumption that the regulators are going to be even more clueless than the people around us in our own space, then any regulations they make are going to be disastrous. Now, maybe I'm, overly hopeful that perhaps they can hire, I mean, maybe Andreas Antonopoulos can clone himself and they could all hire him or something like that, right? Though I was never a big fan of his view on altcoins anyway, so maybe they can find someone, better. I don't know. But look, you don't, I don't even know where to start. Like, none of you wanted Mt. Gox, but Mt. Gox was a result of the fact that you had an exchange that was grossly incompetent. These exchanges in Japan that are immediately shutting down without attempting to comply with regulations, and the regulations are there to make sure people don't lose their money. Look, I'm sorry, NAM is a scam. No exchange should have NAM. So because there is no regulation that was able to tell these exchanges that NAM is an outright scam and should not exist, one exchange loses $532 million worth of NAM. This now affects Bitcoin because now the regulators think that NAM is no different than Bitcoin, but it's completely different from Bitcoin. So in a way, I want these things to be regulated, and I want someone there telling them that, yeah, we got about 4 or 5 tokens that are legit blockchains and everything else is an outright scam. And having that scam on your exchange poses risk to the entire ecosystem, and it shouldn't be there. All right. Now, look, I don't know if the regulators are going to get it right, but regulation of these exchanges is badly needed. And I'm just talking about the technological side of things, the Bitcoin security side of things. I'm not even talking about the corporate structure side of things. You guys don't realize that half of the exchanges you're trading on, like these people wouldn't even be able to, manage a lemonade stand. But because of this environment of no regulation, they are opening exchanges and managing your money and protecting your money. So look, I don't know what the right solution is, but I know that there's no way that holding on to billions of dollars of other people's money can go on in a normal society without some form of oversight and regulation.
Right. Agreed. And to your point, we've talked about this subject time and time again, right? And if we can move from being in the weeds and everybody can start viewing this from more of a holistic standpoint, more high level, they would understand that this absolutely just needs to be understood that it can't keep happening in these ways, that there's a very obvious trend going on. Pretty much in the vast majority of these stories that we talk about, there are overall trends that need to be seen from the greater picture.
Can I just comment on one more thing? Because now people in the chat are going to talk about regulation from the private sector. Google is private sector. Facebook is private sector. Twitter is private sector. And all you got, and the majority of the people in the space, all they keep talking about is how evil these companies are. And they want to decentralize them with scams like Steemit. So no, regulation from the private sector based on the majority of people in the space cannot possibly be a solution.
Very true. All right, moving, I believe, to Blockstream. Yes. ICE, data services, cryptocurrency, data.
Oh, wait, did we skip one? Yeah. Intel.
Is Intel first? Okay, thank you.
Yeah, because this is just a little note. Let's do Intel. That's
okay. Gotcha. All right, here we go. Okay. Intel wants to patent a Bitcoin mining hardware accelerator. So the application for a Bitcoin mining hardware accelerator with optimized message digest and message scheduler data path, the specific application name, was published on Thursday and submitted to the patent office in the United States, actually back in 2016. So in the filing, Intel outlines a method by which it could augment the existing Bitcoin mining process, consuming less electricity, thereby spending less money in the process. I also find this story kind of fun because of Tone yesterday. So Intel has been around forever, right? It's where Moore worked and where he came up with Moore's law. So now a lot of companies, though, have completely overtaken Intel for many years. And Intel kind of just became a chip company in my eyes. But what they're saying here is that they're going to go for a patent that is going to have a way of accelerating chips for mining that's going to make it 30% cheaper in terms of use of energy prices. So one of the biggest chip manufacturers of all time is now devoting resources to not only designing, but patenting some new innovations specifically for Bitcoin mining. So Giacomo, will we continue to see more advances in efficient use in terms of computing power and energy usage?
Oh, sure. What the people that blames Bitcoin for energy consumption don't understand is that economic incentives in Bitcoin just promote the research and development of energy saving strategies. And miners don't want to spend more electricity. They want to crunch more hashes per second, but with the less energy possible. So there is a lot of incentives toward efficiency and reuse of hydro energy or stuff like that, or augmentation or improvement of efficiency of the chips and everything. I think that, again, this news is, for me, mixed feelings because, yet again, as a libertarian, anything related to patent gives me some kind of itch around my skin. But the nice thing about patents in Bitcoin is that, especially Bitcoin mining, is that nobody cares anyway. When somebody patented ASIC Boost, Bitmain just started to use it anyway, violating the patent. Because much of ASIC's production is in China, is in places where intellectual property, which I don't think is a legit kind of property, is not even enforced. So I don't like the fact that that Intel is trying to introduce some kind of intellectual monopoly over Bitcoin mining, because I think that's bad for competition, bad for evolution of the tech, bad for centralization of the production. But I'm fairly confident that the possibility of enforcing this kind of patent will be probably very, very, very low. Also, the news in itself is nice because, one, it means that there is a lot of work to be done in Bitcoin mining. Two, it means that, so for efficiency, for consuming less electricity, granting the same kind of security. And then there is also the fact that incumbents are stepping in, which is a very good news, because if a technology is worth, if a technology is something, you cannot expect to be only followed or managed by newcomers, excited newcomers, or borderline hackers and nerds. If something is valuable, you should expect incumbents to step in. So I'm happy when I see a regulated bank starting storage in Bitcoin for its client. And I'm happy when I see companies like Intel starting to really approach the mining business. Also, it was very it was sad for me to see that all the effort Intel was doing for with 21 Inc. was at risk to be forgotten because of the pivot of 21 Inc. from a kind of mining company to a scam coin based social payment company, which was very sad to see. And I knew that there was a lot of effort by Intel in the 21 Inc. operation. So it's nice that we're recycling it somehow. Also, you know, the situation was heroic, ethic, Bitcoin only companies fighting against Goliath of old world incumbents, then I would probably be more passionate to defend the first. But since what we have in ASIC's monopoly now is Bitmain, I'm way happier than I would like to see Bitmain having to deal with Intel.
True, and it is very difficult to get a patent for tech and software here in the United States, and it does show, as you just mentioned, that they've been going at it for quite a while. Tone, many people are asking about how the expense of mining is going to affect Bitcoin price. Can you address this?
Well, it's going to be interesting. I mean, look, to be honest, I still think mining is profitable at current prices of Bitcoin. That's just my opinion. I have no idea. Nobody does. Each individual miner knows how much they need, how much a Bitcoin is for them to make money. So we'll see what happens there. I'm gonna make my comments short to this Intel thing. I don't believe they're not making new ASICs. They're doing something around the chip that the ASIC is on to make those ASICs more efficient. Now, what Intel will learn, I mean, Intel should have already learned the disaster of 21 that they were supposedly making chips for. So Intel should have an idea what the hell is going on with mining and why it's so difficult. Now, because they're not actually designing an ASIC, because they are trying to patent, making ASICs a little bit more efficient through energy use. I'm not a fan of patents, but this is one of those patents where I'm sure every ASIC maker will probably pay Intel a royalty for this. And if they don't, they can just try and use it. Now, if someone was to actually patent something that had the ASIC chip itself, or even in this case as well, what they will realize, you see, the difference, the reason why this particular patent doesn't worry me, even though I'm not a big fan of patents at all. I'm a big fan of trademarks, but I'm not a fan of patents. Huge difference, huge. Is because you can still have multiple ASIC manufacturers just buying this technology in addition to their ASICs, right? So this is why this is not monopolistic type of technology that Intel is working on. And I'm sure somebody else might be able to, create a slightly more efficiency here. It's probably possible, but in general, if you were to patent something that actually has no competition in ASIC design in Bitcoin, that means you're totally clueless as to what Bitcoin is, because being a sole manufacturer of ASIC chips and having dominance over the Bitcoin mining structure would basically send the price of Bitcoin to zero, hence completely destroying your entire business model. So it just makes absolutely no sense. This is a little bit more borderline than patenting something like ASIC Boost and being the sole user of ASIC Boost using the state as your enforcement arm. So I don't see this as bad, even though I don't like patents in general.
Very interesting. And we'll see how this affects their share price as well, right? Or if they sell it one day. But yeah, absolutely true. Okay, moving on to a very quick story in light of our previous story. Which I will highlight here that we are talking about OKEx. So we have, again, ICE data services, cryptocurrency data feed is live. Pretty self-explanatory. ICE is, it's powered by Blockstream. And that's pretty much what's going on here. There's a lot more.
I mean, just I'll jump it on first. I mean, basically, it's just a data feed. It's just Blockstream has provided ICE, which is a very competent derivatives exchange, and probably regular. I mean, like ICE has been growing like crazy in the traditional finance space. So all they're doing is providing them a mechanism to have clean access and immediate access to the latest crypto data from the latest exchanges. This is great, but what the world actually needs is an index. The world needs a really good real-time index that I can use on TradingView so that I don't have to jump from exchange to exchange to exchange. That's what we really need. So hopefully the ICE can use this data properly, and they have the resources to build a proper index for the world to see for free at tick by tick level, like the S&P 500, like the NASDAQ, like a lot of other indices. This way, the world can, like the traders of the world, like myself, that aren't actually that can use an inline. Like for example, you don't actually trade the S&P 500. You trade a stock in the S&P 500. So if someone gives me a beautiful index, I can use that index for all my charting and all my higher level trading decision making while executing the trades on the underlying exchanges. So hopefully that's where ICE is going to go with that data, and they will make this exchange freely available for all to use at the tick level.
Interesting. Giacomo, what will the implications be for wallets or non-financial tools?
Tom was talking about financial operators like traders or investors that of course can use this kind of feed, but also maybe an index. But even if you are not a trader, not an investor, let's consider you just are a Bitcoin user with a Bitcoin wallet. What you're actually doing is using Bitcoin as a store of value and a medium of exchange, but you are probably not using Bitcoin as a unit of account. When you pay people, you receive money, you are always instantly converting to US dollar or something like that. And all the wallets that we are using now, they are somehow receiving data feeds from exchanges in order to show prices where you convert, which is done on a very, there are no giant attack surfaces, but there are attack surfaces on this, because these wallets are relying on external, usually not signed, not encrypted data feeds. And this kind of standardization of the historical series from exchanges can be actually leveraged by wallet developers in order to, let's imagine that your wallet, when it shows the conversion between Bitcoin and something else when you trade, is actually taking the price from a standard signed source, which is interoperable between every exchange, so you can do any kind of average volume weighted average across exchanges. So that's good news. I remember in a meetup about Bitcoin wallet design in Berlin a few months ago, there was a lot of concerns by wallet developers about the not existence of a unified standard historical data fee signed by the exchanges. So this kind of protocol, I think there are very good news in general for easy of use of price conversion.
Great. And as a follow-up, can you give us our daily update on the mempool and Lightning?
Oh yeah, so I didn't look at the mempool today, but I still think there is nothing noteworthy. Probably, yeah, no. Yeah, I will. I would say that there is still no interesting news about mempool. While about Lightning, we are still growing. The number of mainnet channels today finally surpassed the number of testnet channels, which is interesting. So in order to be more clear, the number of payment channels constituting the Lightning Network on mainnet, so the actual working stuff, is now higher than the number of payment channels in the testnet that was historically the place of the real experimentation. So interesting. We have 3,383 channels, active channels on mainnet, and 3,263 on testnet. Cool. While nodes are growing, still fairly ahead of big cash nodes, stuff like that. And the total capacity of Bitcoin into Lightning channels is the 9.202 Bitcoin. So cool. Of course, it's still experimental, not big money, as it should be. It's still a live production test.
Thank you, Giacomo. Tone, in light of the scary interview conversation with Tyler last night, can you let us know what's going on?
Yeah, so we had a big conversation last night. I mean, there's probably, with my travel, again, later today, I'm off to Vancouver, which is a 6-hour flight. I'm actually so happy the flight is so short. This is what it's gotten to. Like a 6-hour flight for me is now considered a short flight. So look, we're in slightly crappier position right now than we were even last night. But the only good news is that our weekly candle has touched the 50-week moving average for a potential bounce to the upside. The bad news is that you still have about, over 48 hours to go in order for this week to end. So we have no idea if we're going to bounce back to the $7,500 range off of this 50-day moving average, or if we're going to blow past it. I personally think that it's time for us to somewhat consolidate in this $6,500 area. And after the consolidation at the $6,500 area, we will probably take another big step down. But because the weekly outlook is only on week 3 of a potential 9. Now, we haven't had a 9 to the downside in a really, 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 really long time. We had a big 3 candle down back in July of last year, reversed on SegWit news that was able to propel us all the way back up. Now, we also almost made it to a 9 earlier this year when we made it to a 5 and reversed off the 5. Maybe if we have done a full-blown correction at the back in February down to the current levels, or maybe even lower, maybe down to the $4,900, $5,000 levels, do the full cycle of a 9 down, we might have already been back to the upside. But I think the capitulation and the fear and the desperation is rolling in now, and I don't believe that it's over. But the weekly chart is telling me that there's a potential of 6 more weeks of downside, but I have no idea. But that's a time projection. I have no idea how bad it can actually get price-wise. The daily chart is supposed to help us understand how bad it can actually get price-wise. And again, what I feel will happen is daily is on a 7 of 9. So perhaps 2 more days of downside, but those 2 days could be consolidation days. At this point, it's really hard to say. You're already overextended for your short trade. Now it makes it a little bit tricky. I feel that we'll probably be consolidating in this $6,000 to $6,500 area over the next several weeks for one more potential leg down. And then from there, we can start considering going back up. So the daily is still bearish. The weekly has recently turned bearish. Maybe I should do the 12-hour one first. Here's the 12-hour. The 12-hour has also just recently went bearish. That's 3 time frames already. The 4-hour one is the only one that gave you a little bit of a break earlier with a 9, but we have in the last hour and a half, we have already moved back down, making new closing lows. So the 4-hour is treating yet another 9 as a continuation 9 and not a reversal 9. So if the next 4-hour candle, which begins in about 30 minutes, it gives you a new intraday low, you got a bit of a problem, because now you're looking for a 13 countdown on the 4-hour candle, which is actually in line with the 12-hour candle into a 9 and the daily candle into a 9 and the beginning of the weekly bear trend. Going to the 1-hour chart, it looks like we are also, okay, so the 1 hour chart is about to give you a little bit of a relief in a couple of hours, but like I would not be trying to catch this falling knife right now of the 1 hour chart, even if it does give you another green arrow, because every single time frame above the hourly is just, you know, either in the middle of its bear trend or is just starting this bear trend. You know, trade wisely, trade carefully. There's not much you'll be able to do about it. I mean, all the Tyler's hyperwave lines are breaking. I mean, B-Trash and all the other altcoins hopefully will do worse than Bitcoin. Otherwise, crypto has a real problem on its hands. Yeah, that's pretty much it. There's not much else I can add. Just keep in mind that I am in Vancouver as of late tonight to teach the trading seminar tomorrow. A few people are signing up last minute. My price has gone very cheap. You know, my seminars that were once $2,000 are now just over $600, right? Because 0.1 Bitcoin is 0.1 Bitcoin. Makes it a little trickier to travel around the world because the airlines don't let me denominate in Bitcoin yet and lock in my prices. So there you go, kind of what some of us have to deal with that have chosen the life of crypto.
All right. Well, again, the bears are growling. Be careful trading, but happy Friday. And thank you everybody for watching. This is the Bitcoin Morning Brief. It's March 30th. You can listen to this show later on the World Crypto Network. Thanks, guys. Everyone have a great day. Giacomo?
Have a nice day and a nice weekend.
Thanks, guys. Jimmy's back in the country, so we'll see if we can get him back on Monday. Can't promise, but we'll see. We'll try to keep Giacomo as well. We'll see how this works. These are already like bleeding into an hour worth of time, so we got to figure out a happy medium here. All right, guys.
Luckily, I will probably have another thing to manage in the next week.
We'll see you all. Well, I'm not sure what's going on over the weekend. We kind of play it by ear on the weekends, but we'll be back on Monday at the latest. Bye, guys.